Imagine becoming a billionaire, not by inventing a revolutionary product, not by creating a tech company, and not by becoming a celebrity. Instead, you simply buy shares of great businesses, hold them for decades, and let time do the work. Sounds too simple to be true, right? Well, that's exactly what Warren Buffett did. Today, his net worth is worth well over $100 billion, making him one of the richest people on Earth. Yet he still lives in the same house he bought in 1958, drinks Coca-Cola almost every day, eats simple food, and avoids living like a typical billionaire. So how did an ordinary boy from Omaha, Nebraska become the world's greatest investor? Was it luck, intelligence, or a secret strategy that almost nobody follows? In this video, we'll uncover the incredible journey of Warren Buffett, from selling chewing gum as a child to building one of the largest fortunes in history. And by the end, you'll discover the investing principles that can change the way you think about money forever. Let's begin. Warren Edward Buffett was born on August 30th, 1930, in Omaha, Nebraska, during one of the hardest economic periods in American history, the Great Depression. While millions of families struggled financially, young Warren became fascinated by one thing: money. But unlike most children who wanted to spend it, Warren wanted to grow it. At just 6 years old, he bought packs of chewing gum and bottles of Coca-Cola from his grandfather's grocery store and sold them door to door for a small profit. Most kids were playing games. Warren was learning business. By the age of 11, he made his first stock investment. He bought 3 shares of a company called Cities Service Preferred for $38 per share. Soon after buying them, the price dropped to $27. Most beginners would have panicked, but Warren stayed patient. When the stock finally climbed to $40, he sold it, happy with his small profit. Then, something unbelievable happened. The stock later skyrocketed to over $200 per share. That painful lesson stayed with him forever. He realized that patience is often more valuable than quick profits, and that lesson would shape every investment he made for the rest of his life. As Warren entered his teenage years, his passion for business only grew stronger. He delivered newspapers every morning before school. He sold golf balls, magazines, stamps, and anything else that could make him money. While other teenagers spent their earnings on entertainment, Warren invested almost every dollar. By the age of 14, he had saved enough money to buy 40 acres of farmland. Think about that for a moment. A teenager owning farmland. Instead of working on the farm himself, he rented it out and earned passive income. Even at such a young age, Buffett understood one powerful idea: don't work only for money. Make your money work for you. That simple principle became the foundation of his entire financial philosophy. By the time he finished high school, Warren had already earned the equivalent of tens of thousands of dollars in today's money. It was becoming clear that he wasn't just lucky. He saw opportunities where others saw ordinary things. And more importantly, he had the discipline to keep investing instead of spending. But the biggest turning point of his life was still ahead. The man he was about to meet would completely transform the way he invested forever, and that mentor would eventually help create one of the greatest fortunes the world has ever seen. After finishing high school, Warren Buffett knew one thing for certain: he wanted to become the best investor in the world. He enrolled at the University of Nebraska, but his real breakthrough came when he was accepted into Columbia Business School. Why Columbia? Because one man taught there: Benjamin Graham. Graham wasn't just a professor. He was known as the father of value investing. His philosophy was simple: buy wonderful businesses for less than they're truly worth. Instead of chasing hype or following the crowd, Graham believed investors should study a company's financial health, profits, debt, and long-term potential. For Buffett, this wasn't just a lesson. It completely changed the way he looked at money. He later called Benjamin Graham the second most important person in his life, after his own father. After graduation, Buffett wanted to work for Graham. At first, he was rejected, but he didn't give up. Eventually, Graham offered him a job at his investment firm in New York. There, Buffett learned how to stay calm during market crashes, ignore emotional decisions, and focus only on a company's real value. These lessons would later make him one of the greatest investors in history. In 1956, at just 25 years old, Warren Buffett returned to Omaha and started his own investment partnership. He began with a relatively small pool of money from family and friends. But what happened next? Year after year, Buffett consistently earned returns that were far higher than the overall stock market. While others chased risky investments, Buffett patiently searched for undervalued companies. His reputation grew quickly. More investors trusted him with their money. Within just a few years, the partnership had grown into a multi-million-dollar investment business. Buffett wasn't trying to get rich overnight. He believed in something far more powerful: compounding. Small gains, repeated consistently over decades, could create unbelievable wealth. It sounds simple, but very few people have the patience to actually follow it. In the early 1960s, Buffett started buying shares of a struggling textile company called Berkshire Hathaway. At the time, it wasn't a successful business. In fact, the textile industry was already declining. Initially, Buffett bought the stock because he believed it was undervalued and expected to make a quick profit. But after a disagreement with the company's management, he made a surprising decision. Instead of selling his shares, he bought enough stock to take control of the entire company. Looking back, Buffett later admitted that buying Berkshire Hathaway was actually one of his biggest mistakes. The textile business continued to struggle, but then he made a brilliant move. Instead of relying on textiles, he transformed Berkshire Hathaway into a holding company that invested in outstanding businesses. That single decision changed everything. Over the years, Berkshire Hathaway acquired or invested in companies like Coca-Cola, American Express, Apple, See's Candies, Geico, and many more. Every successful investment made Berkshire even stronger, and Buffett's fortune grew alongside it. What began as a struggling textile company eventually became one of the most valuable companies in the world. By the early 2000s, Warren Buffett had become one of the richest people on the planet. Most people expected him to own dozens of mansions, private islands, and a collection of luxury cars. But Buffett chose a completely different lifestyle. He still lives in the same Omaha, Nebraska home that he bought in 1958 for around $31,500. Instead of chasing luxury, he focused on what truly mattered, making smart decisions, protecting his time, and thinking long-term. He has often said that money doesn't create happiness. It gives you freedom, the freedom to spend your time doing what you love. Another surprising habit is his daily routine. Buffett spends a large part of his day reading books, newspapers, company reports, and annual financial statements. He once estimated that he spends up to 80% of his working day reading and thinking. His message is simple. The more you learn, the better decisions you'll make. Knowledge, not shortcuts, became his greatest competitive advantage. Over more than 7 decades, Buffett followed a few timeless principles that rarely changed. Lesson number 1: invest for the long term. While many people panic during market crashes, Buffett sees them as opportunities to buy great companies at better prices. One of his most famous quotes says, "Be fearful when others are greedy, and greedy when others are fearful." In other words, don't let emotions control your financial decisions. Lesson number 2: buy businesses, not stock symbols. Whenever Buffett invests, he imagines buying the entire company, not just a few shares. He asks one simple question: will this business still be successful 10 or 20 years from now? If the answer is yes, it's worth considering. Lesson number 3: let compound growth do the heavy lifting. Buffett didn't become a billionaire overnight. Most of his wealth came after the age of 50, proving that patience can be more powerful than speed. The longer your money stays invested, the more it can grow. Despite building one of the largest fortunes in history, Warren Buffett believes that wealth comes with responsibility. In 2006, he announced that he would donate the vast majority of his fortune to charity, with a large portion going to the Bill and Melinda Gates Foundation and other philanthropic organizations. He also co-founded the Giving Pledge, encouraging the world's wealthiest individuals to donate most of their wealth during their lifetime or through their wills. For Buffett, success isn't measured only by how much money you make. It's also measured by the positive impact you leave on the world. Warren Buffett's story proves something remarkable. You don't need to invent the next iPhone. You don't need to become a movie star. And you don't need to take reckless risks. What you do need is patience, discipline, continuous learning, and the courage to think differently from the crowd. From selling chewing gum door to door, to buying his first stock at just 11 years old, to turning a struggling textile company into one of the most valuable businesses in the world. Warren Buffett's journey is proof that extraordinary success is built through thousands of smart decisions made consistently over time. His greatest investment wasn't just in companies, it was in knowledge, patience, and long-term thinking. And perhaps that's the biggest lesson all of us can learn. If you enjoyed this story and want to discover how the world's richest entrepreneurs built their empires, make sure to subscribe to the channel and turn on notifications. Every week, we bring you inspiring stories about billionaires, luxury brands, and the business strategies that changed the world. Now tell us in the comments, which billionaire's journey should we cover? Thanks for watching, and we'll see you in the next video.